and answers to Starter 3. So Amon is a business tutoring A-level accounting. Amon buys a computer for business use and takes out credit from Currys. The source document is automating credit, so it's an invoice and it's a purchaser's invoice. It's made a purchase. Credit means we use an invoice, it's a purchase invoice. Book a prime entry. Well, the computer isn't his goods, he's not going to sell it on, so that means it's a non-current asset. So therefore, it goes general journal. So the debit and the credit, since it's on credit, there's no cash involved, no bank, no cash. The two accounts will be Currys, the supplier, and computer, or the non-current asset account, which I'm just going to call computer. You could call it equipment, whatever you want. And that's going to be my debit because that's an asset, and Currys is going to be my credit because that's a liability. Okay. The computer costs £600. He depreciates it using a straight line method with the idea that it'll be worth £200 in 5 years' time when he will dispose of it. So it costs £600. He thinks it's going to be worth £200 to get rid of it. So it's going to decrease in value by £400 over 5 years. So divide by 5 to get 1 year. Remember there's a little formula for that. Cost to take away disposal proceeds, divide by the number of years. And that's going to equal £80 per year. And he sells it after 3 years. So 80 times 3. So the provision for depreciation is 240. So the net book value is 600. Take away 240 is 360. He sells it for £400, which is more than it's worth. It's a profit. And the difference was £40. 400 take away 360, £40. Third one, Amon's accounting year ends 31st of May 2020. So that means it started June 2019. He's put £500 on the income statement for rent of his office. However, he has not paid rent for the quarter ending 30th of June 2020. So quarter means 3 months, so that's June, May, and April. So those 3 months equals 240, and he hasn't paid it, so he's accrued these 2 months. He should have paid these 2 months by now, April and May. So work at 1 month, so 240 divided by 3, £80 per month, times by 2 is 160. That's what he should have paid. So I'm going to add it on to 500 to get 660. That's going to go on my income statement, or his income statement is rent. And the 160 is going to go under current liabilities as other payables. As a liability, we owe that money. Fourth one. Oh, and notice on that, I shouldn't have ripped it out as quick. The June's month, the £80 for June, you don't care about yet. If you haven't paid it, that's not until next accounting year. So you just don't care about it. It doesn't go on this year's financial statements at all. Mon received £60 in cash for a tutoring session, but he entered this in his journals as £50. So it's an error of original entry. He's entered it wrong. So let's look what it looks like now. So it's cash sales, so cash is going to be one account, and the sales is tutoring, that's his sale. So sales on the credit side, so he's entered £50. So he's receiving cash £50. It should have been 60. So we're going to put 10 extra in to get to the 60. So our general journal, debit is cash by 10, and credit is sales by 10. It's a Crawford error, so we don't need this expense account. And the last one, explain the difference between trade discount and cash discount. Well, trade discount, that's when you get the discount before the transaction's made. So it could be for loyalty, or it could be for bulk buying, or something along those lines. And the idea of this is taken off the amount before the transaction takes place. So we never owe that money, or we never charge someone that money. We take it off before. So say something is worth £400, and we're buying it from a supplier. they say we'll give you £10 trade discount. So in our accounts, we put £3.90 straight away, because that's what it would say on the invoice. The £10 discount doesn't get recorded anywhere. Yeah, that's what we're choosing. That's what we're choosing to buy for. That's what they're choosing to sell it for. So we've never owed that extra £10. Never. That's the price of the transaction. Whereas if it was a cash discount, then what would happen is they would say you owe us £400, but what we'll do is if you pay early, we'll knock £10 off. So we owe the £400 because it's not guaranteed we will pay early, but if we do pay early, then they'll take the £10 off. So that's when that £10 will go into our discount accounts. So that's for early repayment. Yeah, so trade discount doesn't get recorded because our invoice would just be the final number, the net figure, if you like. Whereas the cash discount does go in our accounts. That does affect our profit and it does affect the accounts.